All right, let's get in the trenches here. Scott, I wanted to get your take. What do you think? What does the end of QE2 mean for you as a trader?
Well, it all depends where we are when it happens. And right now we've had a correction. We're about 4.5% off those highs. So if we're like 6-7% off those highs, QE2 ends and the market doesn't continue lower, all of a sudden we could bounce there.
Right.
So what I'm going to do is what I always do. I'm going to see what acted best during the decline, because in market corrections, what typically happens is you see what's acting best, where the relative strength is, what groups should go to. So once we bounce, that's where I'll go, and that's what we'll tell you where you should be as well.
Do you think there's anything to the rotation that we saw at the end of QE1? And obviously there were so many other factors. We had FinReg, the financial reform in Washington, healthcare reform, the BP oil spill, so obviously energy, financials, and healthcare are going to be lower. But do you think that there's anything to that? Will you be monitoring that at all?
Yes, you always have to monitor past situations, but it's not always indicative of the future type of action, because we might not have another oil spill or the whole healthcare legislation at the time. There might be something else going on in the next month, which we know with Greece, with who knows what goes on with Japan, with all these weather crazy things going on across the world. So there's a lot to take into account. So maybe have a small game plan, but let it be flexible so we see what the action shows us once it is over and once potentially a QE3 comes down the road, if it ever does. Hopefully it won't.
And you don't want a QE3?
No, I don't.
Really? Okay. You think that would be really good for industrials and materials. Well, what
I'd like to see the economy go on its own feet. I want to get off life support system. I'm sick of all these bailouts. Let us take our medicine, and in time, supply and demand will work itself out, and the private sector needs to lead us out, not the public sector. But that's just my opinion.
And the end of QE2 always leads me to gold and silver, and I wanted to see how that would affect your trade, because it directly affects the metals.
Right.
If you sort of shrink the free money supply, then maybe gold and silver isn't that exciting as a hedge against inflation and sort of a hard currency versus the wishy-washy paper currencies that I think a lot of people have been buying gold and silver against. What's your take on that?
Well, right now, short term, my long-term thesis, I do think gold could go to 1800. We said that in the beginning of the year. We met our target of 15 and change. Short term, you look at gold, we had a 4-day trade. I need to see it hold up. Gold gave us a nice move starting last Friday. This is my trade. This is when I said to get in. We are now into some resistance. Let's see if it could hold higher. If it could hold higher, I will go with it. I just want to make sure this isn't a high and a lower high and we continue back down. So right now I would be neutral on gold, but watch it very close.
Especially because options expiration just ended on Wednesday, so we got to have a little bit of shakeout, I think, 1 or 2 days there. Silver, though, had a big rally yesterday, then was up. Do a little dance? Do a little silver dance? There you go. Was up overseas overnight and then sort of tanked about $2 before, and now we're up like 60 cents or something like that. Silver, much more volatile trade. Yeah,
well, that's why we think ahead. We talked 2 days ago after the gold move that now we can play silver, nice tight pattern. Buy SLV above 35, look for a gap fill to 37, and look what happened, guys. No, you should have known this already, right?
Here's the dance.
Here we go. Here's the dance, the little pivot area. We bought a little bit in here, added. I said we could fill this gap. I drew this chart yesterday, not today, so it showed you the level I thought we can get to. So this was hopefully a sell for you guys. And now, let it go sideways also. Let it have a new pivot area, and then maybe we go again. But for now, this was just a trade after a huge move down to support. We'll have to see if it amounts to any more, but for right now, it needs to prove itself as well.
If gold's at 1800, where does silver go, in your opinion?
I could easily go back to 44 to 46, and then perhaps above that 50. So, and also we need to see who leads who. It's changed many times over the course of the past few years.
Yeah.
Who's the dog, who's the mouth, who's the tail?
Okay. I guess my question is, I just don't really know how gold's going to get to that kind of level and bring silver with it if we see monetary tightening around the world, if we see the Fed start to tighten, if it takes money out of the system.
So that's why we are very light right now. We have points of reference. We know where we just pulled back to, so we know where the support is on gold and silver, and we also know where the highs were a month ago. So we'll look at the new pattern, and then we'll let the action tell us. We won't let the headlines dictate it.